Imagine you buy a house, you sign the contract, making the house legally yours. Now you're waiting to get the keys from your estate agent. And you just take the completion of that contract for granted. In the full knowledge, the keys to your new home will be handed over shortly.
Right? You expect your purchase completion to be swift and legally binding. But over 30 years later, you're still waiting for those keys.
Exactly. That's a perfect analogy for Indian public sector bank pensions. That solid contract is practically written in disappearing ink. Today, we're unpacking this huge stack of legal transcripts and union documents to look at a 3-decade financial battle involving over 7 lakhs Indian bank retirees, many of whom are in their late 70s and 80s.
Yes. And we're focusing on this really intense struggle for what they call pension updation. We're making the case that after over 30 years, the time is right to consider interim settlements for super seniors in their late 70s and 80s, because without putting a finer point on it, these category of retirees will soon run down their biological clock permanently.
And for these super senior citizens, I mean, people well into their 70s and 80s, this isn't just some dry technical debate.
No, not at all. It is literally a race against mortality for them. These documents really highlight the difference between a temporary financial band aid and an actual permanent statutory cure, including an interim award to boost what remains of their lives in old age.
Right. And the band-aid in this situation is not another ex-gratia interim payment, similar to the March 2024 12th bipartite settlement. That's a cheap get-out-of-jail card for the banks.
No, we're talking about interim statutory payments. Based on the statements of Justices Vikram Nath and Sandeep Mehta in open court, that banks are strictly liable to pay pensions as per 1995 regulations by rejecting the premise that a temporary ex gratia patch-up absolves banks of systemic non-compliance.
Okay, so the banks and unions originally agreed to this as a stopgap for 5 years while waiting for the Supreme Court to finally rule on the whole thing. And I like to think of this ex gratia payment as well, basically a flat rate store gift card or discount voucher.
That is a perfect analogy.
Because ex gratia doesn't attract dearness relief, and that's the standard metric used to adjust for inflation. So the purchasing power of this so called gift card by the banks is just constantly eaten away by inflation. A true pension grows with the cost of living, but ex gratia just stagnates and buys time for banks' time that super seniors don't have.
Yeah, and the documents show a really profound administrative failure with that gift card system. I mean, the agreement legally mandated annual reviews for April 2004 and 2025, specifically to adjust for inflation.
Oh, wait. Did the banks actually carried out those reviews?
No, they completely ignored them. The banks just skipped them entirely.
You're kidding?
No, not kidding. Their long standing excuse is that pension funds are finite, and they have to be managed separately from general corporate profits.
But wasn't this around the time public sector banks were making massive profits?
Exactly. It's really hard to justify freezing retiree payouts when those exact same institutions were declaring record profits of over 3.7 lakh crore rupees.
Which is like tens of billions of dollars?
Right, and it gets worse because the math behind the payout inadvertently punished the oldest and most vulnerable retirees or super seniors. We're talking about the pre-2002 retirees.
How so?
Well, they calculated their relief on this really outdated tapered dearness allowance scale.
Okay. So instead of just matching inflation equally across the board for everyone?
Right, a tapered scale means the compensation percentage actually drops the higher your original base pay was back in the day. So the absolute oldest folks got a shrinking fraction of relief, while the newer retirees got a flat 100% baseline.
That is so unfair. It creates this fresh inequality and an arbitrary class of retirees right inside the system.
Yes, a measure meant to give them immediate cash flow actually widened the gap between older and newer pensioners, and the banks justified it by saying, well, if we apply a 100% match retrospectively to these decades old pensions, our costs would just balloon out of control.
Right? And that liability argument is basically their ultimate shield, isn't it?
It really is.
Because when this finally climaxed in the Supreme Court earlier this year in early 2026 with the MC Single case, the Indian Banks Association claimed that a full retrospective updation would financially devastate and cripple the banks.
Yeah, they threw out an estimated cost of updation at 95,000 crore rupees.
Right. Wait, so the banks basically used the massive back pay cost as a shield to deny future adjustments entirely. How did the court deal with that?
It was actually brilliant. The Supreme Court justices did this remarkable judicial pivot in April 2026. They saw right through the Ex-Gratia defense.
Glad to be here with you. I am Priyanka Chakraborty, joined by my co host Nisha Bhattacharya. If you enjoy this podcast, hit subscribe. It encourages YouTube to promote and show our podcast to more retirees and relatives like you.
Thank you for your time, and now back to the weighty matter of an interim payment award to bank super seniors.
Okay. What did the justices do?
To neutralize that whole bankruptcy argument, they pivoted away from the demand for the huge retrospective payouts entirely.
Oh, so they just took the historical back pay completely off the table.
Exactly. But only for now. Instead, they ordered a prospective cost breakdown starting in 2026. So it essentially forces a structural permanent fix going forward.
Because without the historic back pay, the banks can't really cry bankruptcy anymore.
Right, the justices cornered them.
That is amazing. And it really shows how a super technical dispute over, Regulation 35(1) is actually this deeply human story.
Yeah, it's about securing legal dignity for septuagenarians and octogenarians who just want the benefits they were promised. And given the way the court is leaning, the time is right to grant super seniors an interim payment. Pending such time, the justices announce their final verdict.
It really is. But it does leave you with a pretty dark realization about bureaucratic attrition. Like massive institutions don't even need to win on the merits. They just need to drag the case on and on until the verdict outlives the petitioners.
Yes, just delay, obfuscate, move the goalposts, etc., until the plaintiffs literally aren't around anymore.
Exactly. Which leaves you with this final thought to ponder today. If massive institutions can use the legal system to delay statutory financial obligations for 30 years through sheer attrition, what other legally binding agreements in our own lives are only as strong as our physical ability to outlive the court appeals?
So we're telling a deeply human story, a decades-long fight for pension updation justice. After 30 years, the case for interim relief is undeniable. Super seniors in their late 70s and 80s are running out of biological time, and without action now, an entire generation will lose the dignity they were promised. Until the next time.